President Trump introduced the idea of a 50-year mortgage in a Truth Social post this weekend with a photo of himself next to one of President Franklin Roosevelt, referencing the New Deal that brought about the 30-year mortgage. Bill Pulte, the director of the Federal Housing Finance Agency, called the proposal a complete game changer. The concept would likely require a regulatory overhaul and has reportedly sown chaos among members of the GOP, not all of whom are on board. But what would the controversial plan actually mean for the housing market and homebuyers? Better now, worse later? Mortgages are typically paid over 30 years, though some buyers choose 15-year plans. A 50-year mortgage, however, would spread out a homeowner's payback period over 5 decades, meaning lower monthly payments. That could, in theory, allow Americans who are currently priced out of the market to buy homes. If someone paid $300,000 for a house and put down the average first-time homebuyer down payment of $27,000, about 9%, the differences in mortgages would look like this. With a 30-year mortgage locked in at 6.2% interest, the payment would be about $2,376 per month. A 50-year mortgage at the same rate would result in a $2,182 monthly payment, but it's more complicated than that. A longer mortgage is a lot riskier, so lenders would likely charge a higher rate, potentially canceling out the benefit of the cheaper monthly payment. Plus, the longer the term, the more the borrower would pay in interest, which would be almost double for a 50-year mortgage compared to a 30-year. It would also take much longer to build equity. The chief economist at Redfin warned that a flux of new homebuyers armed with 50-year mortgages could further drive up housing prices. Trump defended the concept, saying in a Fox News interview on Monday that the difference between traditional mortgages and 50-year plans is not a big deal. Big picture, the plan could boost demand, but it wouldn't address one of the main drivers of high housing costs, supply. Housing inventory is still lacking, with the market set to be short 1.1 million units by the end of the year, according to Ned Davis Research.